calf prices are pretty good, and cow-calf producers are very delighted with that. There's a lot of things that we need to consider looking ahead, and joining us here today is our friend Don Close with Terrain. He is a market expert. He watches these trends and shares a lot of insight with producers day in and day out. And Don, as you've talked with producers here this week in San Diego, there's a lot on people's minds. But as we look at the market here in 2024, what are some of those key things that you're sharing with producers from every sector of the cattle business?
You know, the first thing I would bring up in that context, Lane, is throughout the time I've been in the business, whenever we get to these kind of price plateaus, I don't know that the industry actually takes time to just take a step back and enjoy it. And this is clearly one. When they printed the $2 fed steers in Iowa last week before, I just sat in there thinking about it, and I ran on a nominal basis. During the years that I've been in this business, fed steer prices have increased 536%. It's just amazing.
Well, and so we're looking at that. There's been a lot of concern out there, too, about consumer demand.
Yes.
With obviously record prices for producers, but also there's high prices in the grocery store. But
Yep.
we've actually seen a trend that is pretty positive for the cattle and beef sectors.
Yes.
In terms of consumers.
Yes. At Terrain, we do a monthly calculation where we look at real per capita expenditures. So we deflate all prices, and that enables us to compare prices between species on a dollar-to-dollar basis. And all of that work implies consumer demand has been nothing short of phenomenal. You know, we've seen some challenges in the export trade with the combination of flat price and then the strength of the dollar that's created some challenges on that front. But domestic-wise, in spite of all the inflationary pressures on consumers, they've stayed hooked. We have seen some evidence that with the ultra high-end product, NHTCs and some of the Wagyu product, consumers willing to trade down to a prime or willing to trade down to choice. We've also seen, you know, with the unbelievable demand for all mixes of ground beef and just that shortage of cow slaughter, that the number of chucks and even rounds that are grinding, so that, excuse me, that's absorbed a portion of that market. But just as an umbrella of beef demand collectively, I think that's the true shining star of this whole market.
Now, we have been seeing very, very impressive prices on these video sales. The market
Yes.
is hot. It's underway this week. We have the Superior Week in the Rockies sale.
Yep.
We got the Western video markets all going on this week. And we are seeing a few less heifers sometimes on those sales, but it just depends on the region too. I guess from your perspective, looking at the analytics and tracking that, when we hear heifer retention, we think herd rebuilding. What are the analytics saying about heifer retention?
You know, I've heard some of the interviews you've done and the comments of fewer heifers, and as we look at the breakdown of weekly receipts from the collectively, auction markets, the video sales, numerically, we're not seeing that retention take place.
You're saying those auctioneers are inflating their ego a little bit?
I'm not calling anybody out, but numerically, we're not seeing it. Now, on a practical basis, if you look at the variation in pasture and range conditions across the 48 states, are we seeing pockets where conditions are warranting expansion? Yes. We are. We're also still seeing areas that are still under a lot of stress. The one thing that, as we've done meetings throughout this year, and we talk with producers about their plans for expansion or hesitation, the number one answer that we would get is either pasture and range conditions or hay inventories. They just weren't yet to a position to expand. I think that's correct, improving. But the number two answer that we would get from producers is they're just using this opportunity to sell everything they can sell, from steers, heifers, and even cull cows, rebuild that balance sheet before they plunge back into the deep end of the pool. I think there's still a lot of that going on.
You know, obviously we are seeing these higher calf prices as we focus more on that cow-calf producer, but there's a lot of risk in that too, especially when feedlots are paying these prices as well. I guess, what are some of the tips you've been sharing with producers, not just here this week, but day in and day out about managing risk in the livestock sector? Because that's something that is new to some producers.
Yes, it is. The first thing that we're telling customers of whichever segment of the industry they're in, that at these kind of first cost levels, the volatility associated with these tight supplies, that if they're not willing to have a risk management plan in place, don't buy the cattle. It's just the risk is too high. So that's number one. The second thing that I think is just reflective of where we're at in the cycle is the real opportunity for all of the classes of margin operators. They're going to be under a lot of squeeze, particularly on the wheat pasture, the stocker operations, wheat pasture operations, and the commercial feed yards. Just their first cost, they're really going to have to be on top of their management game to make a lot of these cattle work.
Well, you speak about risk management solutions. I should mention our friends at Ag Risk Advisors. They help provide some of those risk management solutions for producers, so check them out online. Got to give a shout out to our sponsors of this. But Don, obviously producers are asking the question, with your insight there, there's maybe not as much herd rebuilding taking place, but how long can we expect to see these prices? Because we know we can rebuild a herd pretty fast if the conditions are right. So
we can. The thing that I've spent all the meetings that I've done this year, probably the most frequently asked question that I have gotten is comparisons of this market to the 2014-2015 market. And we try to explain that if you look at the depletion that we've done of the cow herd, the number of heifers on feed, depleting that replacement heifer supply, this market is entirely, structurally, it is entirely different than the 14-15 market. As a result of that, I think the opportunity for this market going forward, you would easily talk 2 years, and depending on the delay on these heifer retention, we could see this thing last 3 years. We're not implying that prices are going to continue to escalate at the rate we have for the second half of 23 and year to date. I think there's still higher prices to come.
Well, again, we're going to continue to track that and share important conversations and information like we received from you here today on the Western Ag Network. Don, thank you so much for all that insight.
Lane, it's always good talking with you.
Well, friends, this is just some of all the conversations we're having here in San Diego. We've enjoyed our time down here. We want to thank you for traveling along with us as we've brought you these important topics back home, wherever you are enjoying these. With that, friends, thank you for joining us for our On the Road series, brought to you by Ag Risk Advisors. Reporting from San Diego, I'm Lane Nordlund for the Western Ag Network.